Good evening, gents and ladies. This short video is on sustainability reporting, an important contemporary issue in this day and age. We will go through how Tesla Motors, our chosen company, does their bit towards a sustainable future. The video will go through the implications and the current state of sustainability reporting and various frameworks and standards involved, and finally provide some recommendations to companies and stakeholders in general. Firstly, the general implications of sustainability reporting are as follows. They provide a company an opportunity to showcase themselves and the customers to make mindful choices. A global survey revealed that of 30,000 respondents, over half of them not only took into account the environmental and social responsibility of the organization when purchasing their products, they were also willing to pay a premium for the sustainably produced goods. Furthermore, most people associate the recycling symbol with environmentally friendly products. The importance of sustainability reporting can go even deeper. The information regarding a company's sustainability helps stakeholders form their opinions on the organization's long-term creation of value above the provision of goods and services. They can determine whether the company is part of the solution, not the problem. Under this fall, the challenges of industry standards following relevant regulations, and most importantly, Tesla Motors, based in Palo Alto, California, is a company that produces electric cars and equipment related to such vehicles. Tesla Motors aims to provide affordable electronic cars that will lead to decreased carbon emissions as well as reduce the dependency of the general masses on fossil fuels. They acknowledge that there is a need for a change towards a more sustainable source of energy as the world will inevitably run out of fossil fuels. Further, this concern for the environmental impact of cars shows how the company has incorporated sustainable actions into their business plan. In 2010, the company received the Environmental Leadership Award from Green Cross International. Energy innovation is one of their core values, and their aim is to help set up a sustainable environment in the future. However, Tesla Motors fails at complying with the multitude of sustainability watchdog standards. A report published by Green Companies Listings states that Tesla Motors ranked at 431 out of 500 companies that in terms of their sustainability reports. Polarizing reports such as these lead us to question the validity of the sustainability reporting standards.
Sustainability reporting has increased over the last decades. Studies show that accounting majors believe that sustainability reporting has a positive effect on a company's profits, reputation, and consumer loyalty. It is important to note that these are the opinions of the future generation of the accounting professionals, and the transition to that state of sustainability reporting is already taking place. The problem with sustainability reporting lies in the incentives. Due to the lack of a fundamental framework and the lack of direction from the Australian government in these regards, companies have their own agenda when it comes to reporting. Most reporters of sustainability belong to a group of consumer-oriented companies. For them, the reporting offers a visible symbol of differentiation. For other experienced large companies, the strategic importance of reporting lies with legitimacy. Out of all the frameworks, the most recognized ones are the Carbon Disclosure Project, Global Reporting Initiative, and the Dow Jones Sustainability Index. They provide investors and stakeholders with the most complete and accurate representation of a company's stance on sustainability. Not only that, the GRI guidelines enable harmonization with internationally accepted reporting. They also focus on disclosure of ethics and integrity and generating relevant standardized information. Companies should not only focus on externalities, such as waste, lack of recycling, or pollution, but should make a solid effort in improving the community. The sustainability reports inform the shareholders on the company's initiatives and results. The problem with sustainability is the lack of audit and evidence checking behind the reporting. Therefore, companies should ensure their reports hold credibility. We encourage companies to include missed targets and even mistakes, as to show a genuine effort in their communal endeavors. Most companies make sustainability reports for the virtual signaling, in other words, look how green we are, but have no real practice in place. Obviously, if you have secrets on the level of Volkswagen, admitting to them won't help your credibility, but being straightforward and honest definitely will.